I bet we live, we live, we live. What's good, family? Welcome back. This is lesson 4 of the optimal SMFX trading playbook, right? For these next two lessons, right? These are two separate lessons, right? This is the same lesson, right? But there's two parts, right? So we have hidden with the OOE part 1, right? And what is hidden with the OOE? Hidden with the OOE, right? That's just a term that we use. It's just like more or less like, ooh, like probably somebody probably got crossed up on the basketball court or something, right? So what are we doing? We hitting them with the ooh, ooh, right? So what does ooh stand for? What does ooh stand for? Optimal, elite entries, right? Optimal, elite entries. Right. So this is just going to this is an extensive breakdown of how to look for your entries when you've already gone through your confirmations. So in the first three lessons, right? In the first three lessons, I've gone over market structure, right? What is market structure? Market structure consists of three types of market conditions: consolidation, trending, and reversing. Right? Those are your three types of market conditions. So when it comes to market structure, you're identifying, okay, are we in consolidation? Are we in a trending market? Are we in a reversing market? Right? Lesson number 2 was on price action, right? The anatomy of a candlestick and the play on whole, half, and quarter levels when it comes to these candlesticks forming and where to look for specific retest. Right? Also in lesson 1, an extensive breakdown of top-down analysis and what to look for and identify when breaking down your chart, right? So now smart money was lesson 3, where we went over understanding the psychology of the big banks and how they drive price in whatever direction that they feel like it. So now, with that being said, we're going to be putting together extra confirmation. And all extra confirmation is just you applying, right? You applying certain intraday tactics, right? Intraday tactics and strategies to secure your entries. So when you put all of those three confirmations together, now when it comes to finding an entry, every entry is different. But here's the thing, the play is the same. What do I mean by that? When you're looking for a buy, you're looking for the higher low point, right? So when you're looking for the higher low point, it's always going to be at a different price level because price is always ranging and creating new highs and new lows, right? So we're looking for the same play, it's just going to be a different entry point. So we're still looking for a lower high, but it's just going to be at a different price level. It may retest either the broken low or an open money spot like an imbalance or a trap money candle before continuing, right? So there's different ways of looking for the same play. And all I'm helping you with when it comes to securing these optimal elite entries, we're going to be using the Fibonacci and the Asian range, right? The Asian range. And I will also extensively break down using your, predicting your risk to rewards. So let's get started, right? So we're going over the Fibonacci tool, right? We're going over the Fibonacci tool. So using the Fib Retracement tool, the Fib, right? The Fibonacci. The Fib is used to measure a shallow or deep correction, right? Retracement. Retracement and correction is the same thing. So it's used to measure a shallow or deep correction, looking for the continuation. Look at the fib as your discount weapon, your discount tool. When looking for a buy, you want price as low as the previous one created. So you draw your fib from the low to the high of the recent bullish move. When looking for a sell, you want a price as high as the previous one created. So you draw your fib from the high to low of recent bearish move. The fib is used to help you wait and catch the next potential big move. So my fib levels consist of the 25%, 40%, 50%, 62, 75, and 85 retracement levels. I also have the negative 0.27 as TP1, take profit 1, the negative 0.618 as TP2, and negative 1 as TP3. Between the 25 and 40% levels show signs of an aggressive continuation, a shallow pullback. The 50% represents trending. Once above, we're above. Once we break below, we break below. The 62 to 85% levels show signs of a major reversal, which is the continuation of trend. They act the same as any half, whole, quarter level, helping you to get an optimal trade setup, right? So these are my fib levels. I use my fibs, like I said, rounded off to the nearest whole, half, or quarter level. So that way we can get a full spectrum of the breakdown of looking for retracements and helping you understand the calculated moves that happen within a high to low range when looking for a correction, retracement, pullback. So first things first, this is an example of a deeper retracement, correction, pullback for a buy, right? So once again, retracement, correction, and pullback is the same thing for a buy, with the negative 0.027 being target 1 and the negative 0.618 being target 2, and obviously negative 1 being target 3. So in this scenario, right, we are in a bullish move. So what are we identifying right now? We're identifying this low to this high. Why this high and not this one? Because this was the high that initiated the pullback. So you want to measure the whole move from low to high. So notice an example of a deeper retracement. As you can see, the market came inside that 62, 75, and 85% area, right? And then as you can see, the market tested, respected, and continued going higher, right? Let's look at the 50. When we broke back above the 50, 50%, right? We respected that 50%. Shot up, hit TP1. Now, as you can see, we secured some profits, took partials, right? Move our stop losses to break even. Now we are in a risk-free trade. As you can see, the market makes another pullback, which is just another higher low point, right? So we have a higher low, higher high, higher low, higher high, higher low. That higher low comes back and retests that 25 and 40% area for an aggressive continuation, which is what I'm about to show you right now. So this is signs of an aggressive continuation. So once again, this is a bullish move. We measure low to high, pullback, and the market stayed around that 25, 40% area, right? And then as you can see, the market pushed higher. TP1, TP2 was reached. So these are your faster moves that will play out in a shorter time span than what would a potential move of a deeper retracement would actually play out. So those are buys, and literally the same thing for a sell. It's literally the same thing for a sell. Right? So we have our high, we have our lower low. So essentially we're looking for the lower high point. And as you can see on a deeper retracement, this is an example of a deeper retracement for a sell. Once again, the negative 27 is target 1, 618, target 2. So we look for the pullback. The market respected that 62 to 85% range and continued to downtrend and create lower lows, lower highs, lower low, lower high, smashing through TP1 and smashing through TP2. So once again, this is allowing you to notice more of a reason to get into a trade, right? The Fibonacci is helping you realize the retracement of a range. So once again, we broke down the whole half and quarter level theory. Guess what? If we're in a 100 pip range and we have a 75% pullback, what is that? 75 pips. If we have a 50% pullback of 100% range, of 100 pip range, what is that? 50 pips. So literally, the market can move 120 pips, right? And we are measuring that 120 pip range. Either way, a 75% retracement is the same thing as a 75 pip pullback. So we need to fully grasp this understanding of looking for a discounted price. So once again, the Fibonacci is just your discount tool to find a better pricing for a better entry. So that's a deeper retracement. Now we have our shallow retracement, which is once again a respect of the 40 and the 25%. And as you can see, the market makes its way TP1, TP2, TP3. So using the Fibonacci is a way of helping you see a longer term trade, right? So after you get all of your other confirmations, you use the Fibonacci to potentially see a longer term trade. So these are your four main um, four main examples of how to use your Fib. And what I'm going to do now is actually go on the chart and show you how to use that Fib. So we're going to go to my favorite pair, GA, right? Because this baby be moving. So I'm just going to randomly pick an area and use that area as our play around example. So boom, I'm going to box off this area right here. I'm going to box off this area right here. What we're going to do is we're just going to play this off of the daily time frame just so we can see how to look for, you know, intraday trades and potentially short-term trades into long-term trades. So once again, this market moves in waves. We have 3 pushes to the downside, 3 pushes to the upside. We have a sideways choppy movement of 3 range trap, right? Basically 3 strikes, right? The market has 3 strikes, 3 strike movements, whether we're going sideways, whether we're going down, or whether we're going up. The market is going to push in 3 cycles, right? So when we understand that after every third push, we're going to see some type of halt in price before actually potentially continuing or reversing. So when we're noticing these certain things, that's what can help us either identify the next uptrend, downtrend, or big reversal move. Either way, when the market reverses, it's either going in an uptrend or a downtrend. There's only one or two things that the market is doing. So what we can notice here, right here. So the market creates highs, right? The market creates highs. Right? Money sitting right there. And the market creates lows. Right? Money sitting right below here. Right? Equal lows, equal high point. And as you can see, the market will clear that range. Right? The market will clear that range. So when they run the high of a range, they're coming to run the low of a range. That's what sets the cycle to go either in an uptrend or downtrend. So like I said, we have three pushes, right? We have three strikes in the market, right? One push, two push, three push, reverse, one push, two push, three push, reverse, one push, two push, three push, reverse. So truly understand, family, like this is literally the schematic of the market. And like I said, you guys have to have access to my Telegram chat in order to see those files. But if you pull up that file of the Forex chart anatomy, right? Guess what? Guess what you're gonna find? You are going to find the blueprint. You're going to find the blueprint, the market stages, the market cycles, distribution schematic, accumulation schematic. Wow, the market is legit doing all of that, literally. All right, the market is legit doing that. Cycle begins, breakout, buy setup, right? Breakout again, buy setup, breakout, reach the high point, pull it back, and literally do the same thing. So when we identify that, right, we notice that the market ran, right, this major low point, right? The market ran that major low point while also filling in an imbalance, right? While also filling in an imbalance. So below this major low, there was a void in price right here. All right, there was a void in price right there, and they filled it in. So we had a confirmation of a potential higher low point. We ran some equal lows, grabbed liquidity, and then we created a double bottom, right? Go to the line chart, you can see it, W, right? So we're playing this off the daily. So we see that we have lower low, lower high, right? Lower low, lower high, lower low. So now let's truly identify, right? Let's truly identify these low lows and lower high points. So we have, right, a lower high. Because remember, when we break a lower high structure point, that means we are in an uptrend now. Right? We're in an uptrend now. Right? That's a lower high. Right? And right here is a lower high. Right here's a lower high point. Boom, lower high. So now let's notice something. When the market came and created this lower high right here, look what it did. It never created a lower low. It respected that low. So because it respected that low, look what it did. It went on a nice bullish run and broke downtrend structure. So when we break downtrend structure, what is that telling us? Uptrend, uptrend. So when we make a new high, what do we look for? Right? A higher low point. Where do we normally want to look for a higher low point from? That initial break of structure, right? So we're looking for a play over here inside this structure point. So with that being said, I know that we have an area right here of structure, right? A trap money zone on the daily, right? Trap money zone on the daily trap. So now what can we identify? Right? What can we identify? The fact that we have a higher high point, right? So this is the high of the new range. So here's what I'm going to do. I'm going to measure from the recent move that broke structure. So yes, this is the ultimate low, but this wasn't the low that initiated the move to break these highs. This is the low, right, that started the move to break these highs. So I'm going to measure from this low to this high. Right? So as we can see, the market came back, retested, and respected that 62% area. Right? That 62% area was respected. And then when we did make a move higher, we created a higher high. Right? After a higher high, we got a higher low. And look, we respected that 25 and 40% and continued going higher. Right? We smashed through TP1, right? And we fell short of TP2. By the time price had hit TP1, you would have already been taking partials, taking a lot of profits off the board, and having your stop loss and profit anyway. So literally, that's how you would have played that move. And we could have gone on the 4 hour and broke it down a little bit more. Finding more of a precise entry and being able to actually lower our risk, right? And lower our risk. So, like I said, from the daily perspective, this was the ultimate low that broke the structure. So, looking at it from the 4 hour, notice how we have this slight consolidation right here. Notice how we have this slight consolidation right here. All right. The market legit was just moving choppy upward. So let's notice something. From this point right here, right? From this point, after these pullbacks, right? This was the point that broke structure on the 4 hour and never came back. So guess what? Looking at it from the 4 hour, you could have drawn your fib from this point, from this low point to the high, right? To the high. So now that way we can get that optimal trade entry zone, right? Now we can actually get a nice trade set up from our optimal trade entry zone, which is the 75 and 85%. That's what we call the sweet spot. That's the sweet spot, the sweet spot, right? So when we take an entry from our fib, we can notice the fact that we have a trap money spot. So we found our open money. We noticed our trend, right? Smart money was the play on why we found this daily trap money, right? We found an imbalance that the market already had played off of to give us our bias, right? And now we have more confirmation from our Fibonacci with the fact that they gave off a bullish engulfing on the first leg of the W and then gave another bullish engulfing on the second leg of the W to take the trade out of here, right? So now what nearest whole, half, and quarter level were we around to take this trade? So I can, so boom, TP1 would have been right here, right? And we got to remember, like, this is a big range. So truly understand that this is more than a 500 pip move. Realize people are struggling to catch 20 pips. So let's be grateful for what we are learning so we can truly, truly capitalize on how to have low risk, high reward setups. So with that being said, now we want to track what whole, half, and quarter level is around this major area that we're looking for buys from. So essentially, we want to take a buy from the daily trap money zone itself, right? We want to take that buy from inside the zone. So our nearest level, whole level potentially is 76 flat. $7,600, right? And then we have a nice half level of 76,500, right? Nice half level. So we found a major whole and half level. And as you can see precisely, right, the market failed to retest 76 the first time, shot up out of there. Now, the second time price comes back, guess what? It really, really respected this area by leaving this longer wick on the 4 hour, right? Respecting the zone. So we have wicks to the low and closers above. Those are our confirmations, right? Those are our confirmations. When we're looking for these, potential moves, we know that we're either looking for a W at a low or an M at a high, right? Double bottom, double top, right? Double bottom, double top. So because we're looking for the buys, we're potentially looking for a double bottom or a inverted head and shoulders. So taking this trade setup, right, we would have taken our entry around that half level, 76,500, right? Stop loss would have not been no 200 pips because of the fact we were able to analyze and find a nice, area of interest to take a trade setup, right? We are able to risk no more than 50 pips on this setup, right? And we're looking to gain TP1, right, is at 690 pips. So realize something. This is a 13-to-1 risk to reward trade, literally. And we only normally shoot for a 3-to-1 to 5-to-1 to 8-to-1 trade setups. So think about this. You're risking $50 to gain $400 plus. And in this case, $690, right? The market smashed through that in a matter of 8 days. So a whole week, right? A whole week in the day. A week in the day for you to make $690. Now, here's another thing. This is how you track your setups. So if you know that this is a higher low point, right? Like I said, you look at the 4 hour for breaks of structure. So if you find your trend move, you can be able to keep trending the market, right? You can keep trending the market. So what do we have? We have areas of structure that were broken, right? We have areas of structure that were broken. We have a nice zone that the market was able to break out from the 4 hour, right? So the reason why I'm putting this zone right here is because of this trap money candle, right? So notice this was the last down candle before the up move, and the market trended higher. Then when we came back, we broke below it, retested it for sales, right? So we sold, came back, sold, came back, sold. Now we broke back above. So 4 hours showed us that we broke above a major structure. So when we break major structures, we just know that we're going that way for that trend. So using the Fibonacci again is what I would do. Measure it from the low to the high that was created, and boom, we have, right, confirmation for an aggressive continuation, a shallow retracement. So instead of a deeper retracement, we have a shallow retracement where we stayed between the 25 and the 40%. Because once again, we already got confirmation that we broke structure. So now we're in this uptrend. So we created a higher high. After a higher high, what do we get? Higher low. So now, boom, double bottom on the 1 hour, right? So once again, when you start noticing the patterns, start noticing the trends, when you see something on the daily and 4 hour, you know how it looks on the 1 hour and lower, right? Because you just built your eye, you've gained a lot of experience to see certain things in the market. So being able to notice something like that on the 4 hour, right? When you're looking for your entries, you want to find your entries on 15 and 5 minute. So you got to know how to be able to break down the chart from the daily 4 hour so you can see how it potentially can play out on the 1 hour. Oh yeah. I hope the market, boom, right? Here we go. So literally, this is what the market looks like on the 1 hour after breaking it down from the daily and 4 hour. We can notice the market gave a nice double bottom, triple bottom action. The first test came at 10 in the morning, right? 10 in the morning. The second test came at 9 at night. The third test came at 3, 4 in the morning. So truly understand, family, this move played out in every single, right? So the confirmation, they gave you confirmation 3 separate times in 3 different sessions. And in each time that they gave out the move, it happened in between our trading hours. So let's truly, truly lay hold of what it is that we're learning right now and notice how we can capitalize. So remember, we are in this one position already. So now think about this. We have a new move, a new range. So this is technically this is a new setup for us. So when we're taking this setup, we want to take the setup anywhere around the 25 and 40%. But once again, we want to look for the nearest whole half quarter level. Where's the nearest whole level or half level? So 79, right? So we got 79 flat as our whole level. Right? And then 79, 500 as our half level. And look how we respected those areas in that zone. Look how we look at price action. Right? Price action allowed you to see that they are respecting these areas. So, right, even though we want to take entries around the 25 and 40, we still can use our plan. So guess what? We're taking our entry around around the next half level, right? Since we don't have to risk that much, right? Our stop loss can potentially go, right, anywhere around the previous low, which would be the next point of respect. So as you can see, the market never broke back below this low. So our stop loss would have potentially been another 50 pips, looking for, right, 100 plus, 200 plus, TP1, TP2, TP3. So TP2 would have been the one that got smashed. We wouldn't have known that. But after TP1 is when we're protecting our profits anyway. So as you can see, we capitalize on the same uptrend, two different moves, the same entry technique. So I need you to understand something, family. You can do the same thing for a downtrend. The market plays out the same. You just need to find the setup. Are you looking for a sell or are you looking for a buy? Because there's two ways to view the market: a buyer's market or a seller's market. The market is not going to do what you want. The market is only going to do what it does. So if you're in flow with the market, it will never steer you wrong as long as you read it the right way. Simple. So I hope you guys was able to really grasp, right, this concept of using the Fibonacci and how it um, ties into our confirmations and how this can help you with extra confirmation. So this is the Fibonacci. So that's it for today's lesson. Obviously, that's why everything is in the lesson. So I don't just bombard you guys with, everything. Uh, but literally, when looking for a sell, you're doing the same thing. Um, High, we made a high. We broke some lows. We made a new low. So guess what? Market stayed below the 50%, respected the 25 and 40, TP1, TP2, TP3. Right? As long as you know what you're looking for, the market will always play out in your favor. Right? The market will always play out in your favor. So go ahead, do your studying. Make sure you guys really, really, really do your back testing and going on your charts and marking it up yourself, because marking up the chart yourself is what's going to help you learn. Simple, right? Apply this information to a T because it works. And I'll catch you guys in the next lesson. You guys, it's a savage world. Be fearless in it. Bless up.